It's nearing year's end, and I think a topic on every business owner's mind is, have I fully maximized my deductions this year? Also known as the thing that can help you lower what you owe to the government. You know, we've all seen that trending audio on Reels and TikTok with David from Schitt's Creek saying he's sending that purchase to the write-off people. Well, I'm going to tell you what purchases you can actually send to the write-off people, better known as the IRS or your state government. Ultimately, taxes are a huge pain point for business owners and lives in the back of our mind literally all year. But then November and December roll around and you're like, did I do what I needed to do in terms of enough deductions? We often wonder as business owners, can I deduct this? Should I deduct more? Will the IRS investigate my deductions? Are they legit enough? You know, nightmare scenarios. Today, I'm going to lay out all of the deductions you may take advantage of right now before the year is over. And if you start thinking about it now versus right before Christmas or December 31st, you can not only feel more prepared, but also set yourself up for more success in 2023 because you've ultimately saved money, especially since next week is Black Friday. You can save on those quote unquote write-off expenses that David has told you in Reels and TikToks even more because everyone is having a sale next week. And I always tell people waiting until the last minute, like December 30th or 31st, could actually cost you more in write-off expenses when you could have gotten a steal over Black Friday week if you were strategic about your tax deductions. This is all why I am putting this episode out this week, right before next week. So without further ado, friends, let's get into today's episode. You're listening to the Legal Paige Podcast, where we chat about life and business with a legal twist. I'm Paige, attorney and photographer helping online businesses and creatives tackle their business dreams without breaking out in hives. No more legal mumbo jumbo. This podcast features simple, bite-sized advice that'll have you legally legit in no time. Are you ready? Let's get started. As a reminder, before we get into this episode, I am legally obligated to give my disclaimer. I am an attorney, but I am not your attorney. All legal information I talk about in this episode is intended for the masses and a large variety of different businesses. Please seek out another attorney in your city and home state if you need specific legal advice related to your unique business. Okay, let's get back to it. Okay, Legal Pagers, here are the deductions that I suggest you maybe take advantage of next week during Black Friday sales and also throughout the remainder of the year and holiday season, because we all know sales are definitely going to start up next week and go through December 25th, if not December 21st. Because we all know sales will be going on through December 25th, December 31st, you name it. People are having sales 24/7. But of course, next week, you want to keep an eye out for these things that I suggest that you deduct for your business. Number one is office improvements. Lots of business owners don't know that even if their office is in their house, if you're making repairs or upgrades to your space and that space is used 100% of the time for your business purposes, you can deduct those expenses. If you want to do some framing of like specific artwork for your office, if you, want to do some board and batten in your office and upgrade it because that's going to look better on all of your Zoom calls. If your back is killing you because you're using a chair from the kitchen table at your desk, now's the time to treat yourself to that new ergonomic chair. And I can guarantee that the places you want to buy it from are having a sale next week. The cost of minor repairs to your business premises are also tax deductible. So I always suggest making those minimum tiny repairs by December 31st. And the IRS, you guys, characterizes this as the cost of property maintenance, as either repairs, quote unquote, or improvements, quote unquote. So that's what you're going to want to tag it as in QuickBooks if you're doing your own books, or at least tell your bookkeeper to categorize it as such. You can generally deduct the cost of a routine repair within a single year. So any type of repairs you need to do, whether you need to send in your gear for repair by the end of the year, whether you need to repair outlets and maintain like a different standard of outlets in your office, whether, you need to repair your chair, whether you need to repair your desk, whether you need to upgrade it to a standing sitting desk, Walking pads are a thing now, and you better believe next week, my improvement in my office is I already have a standing desk, but I need something to walk on when I'm standing. And in the winter in Montana, I was like, a walking pad would be great. And I've seen people use them. They're all over social media right now. So you better believe I'm going to expense that and write that off next week during Black Friday sales. So first thing, office improvements. Next thing, stock up and prepay expenses. People kind of forget this. Like, if you're looking for some end of the year deductions, claiming a deduction for eligible business expenses ahead of time can save money. Because, like I said, deductions reduce your taxable income for that business year by December 31st. So if you do have additional cash and profit for your business sitting around, or you can reasonably use your credit line or a business credit card for purchases, you can stock up on supplies or prepay for certain expenses to give you a larger deduction for 2022 tax year. Ideas of this include replenishing office supplies or supplies that you regularly use, stocking up on inventory, especially if you can get it at a discount by the end of the year. Sometimes they have like end of the year, splash sales or like inventory sales for t-shirts or for mugs. And you could buy those and stock up on the inventory and then just put your logos and such and print on them later down the line. I also suggest kind of stocking up on regularly used office supplies and the inventory kind of in your office closet. So at the end of the year, I always stock up on like bubble mailers. I stock up on business cards. I stock up on stickers that I use on those bubble mailers. I stock up on thank you cards. And you're probably going to be able to find them at a discount, like I said, next week or throughout the remainder of this year because they're having kind of like closeout year-end sales. Now, prepaying expenses. If you have a little bit of extra money and you're like, I have a business profit of, $50,000 to $100,000 that's sitting in my bank account that I know I'm going to be paying a hefty tax bill on and tax liability for, then prepaying for large chunks of things by the end of the year, lots of softwares and programs offer this because they know you're trying to get end of the year deductions. I always look into prepaying for my insurance coverage for the next year ahead of time. I think that's a great business expense. If you also use subscription services, you can switch from a monthly plan to a yearly payment in December, and they often offer higher discounts because it's like end of the year. They're trying to get a bunch of revenue and money in the door as well. So you could prepay for that. But again, only do this if you have a large chunk of business profit that you're trying to reduce by the end of the year. And also only if you're going to utilize that service next year. Don't buy new things. Don't subscribe to new things. Don't prepay for a yearly subscription on something you haven't even known if it's worthwhile to use in your business yet. I always suggest doing monthly subscriptions for that thing to see if it's actually worthwhile to begin with. And it's, going to be something that you use from day to day or week to week in your business. But if it's something that you have used for the past year or two, great time to kind of bundle it together in November and December and prepay for 2023. The third business deduction is one that's near and dear to my heart: buy contracts. If you've ever been eyeing up adding a new revenue stream to your business or offering additional services to your clients or just tightening up your business to help you sleep soundly at night, legal contract templates are 100% deductible as professional services, and they will be designated as such on your tax liability statements at the end of the year. The good news is when you buy contract templates, not only are they tax deductible, but it's going to give back to your business time and time and again for years and years to come. And although you can't see the direct amount that it gives back to you right away, a proper contract is going to save you in potential lawsuits, missed client payments, and all those other what-if scenarios. One of the big reasons we here at the Legal Paige have sales near the end of the year is due to the deductibility of our digital products. It's a win-win for our customers who are all business owners because they can get that extra $200 to $500 deduction for their business before the year's end. And also, our products will benefit them for years down the road. Of course, you can use contracts to add to any new revenue streams that you're thinking of in 2023. And if you haven't listened yet, check out my previous couple of episodes, episode 143 and 144, that are talking about adding in new revenue streams. I talk about the legal documents you'll need for those. And we usually have a sale coming up soon, so you better stay apprised of when we do this. You can follow me on social media. You can join tlpinsider.com. I will be letting you know very shortly when we have a big sale. So you can buy contract templates. They're 100% deductible, and they're going to be at a discount. So you can still keep that extra little bit in chunk as actual revenue and business income. Next, I always suggest writing off bad business debts. So bad, which are uncollectible debts, can be written off before the year's end, and the uncollected debts can be deducted from your taxable business income. So the IRS also includes unpaid loans and business loan guarantees under the bad debt umbrella. So to deduct bad debts, you have to use the accrual accounting method and not the cash basis accounting method. So you have to run an accounts receivable aging report to see which receivables that you have sent out are unpaid from customers or clients. You need to make a note of which debts you may still be able to collect on and which ones have a high certainty of remaining unpaid. All those bad debts that you want to write off, and review the list with your tax advisor now before the end of the year, because you need to write those off by December 31st. And just know that if you receive the money from a customer later, you will have to reverse that write-off and declare the payment as income. But oftentimes, by the end of the year, you can sit down and be like, okay, what accounts receivable are supposed to be coming in that I know are probably never going to get paid? Write that off for the tax year. Another idea I always have for people for deductible expenses, and this is a way to ultimately build a lot of loyalty and trust with people who work for you, and it's going to give back tenfold in 2023, is give your workers bonuses or gifts, especially if you have employees. In addition to receiving a tax deduction for paying bonuses or gifts to your employees, you also receive so much goodwill from your employees on the flip side of it. And especially around the holidays, they want you to scratch their back like they've been scratching yours all year and working for you. So bonuses to employees of all types of companies are deductible business expenses if they're considered additional pay for services and not gifts. So gifting, you can go back. We have a gifting episode on the Legal Paige podcast, and it kind of talks about the threshold, which is way too low and it needs to be changed. I digress there. I'm not going to go into it. Just go listen to the episode. But bonuses, like actual monetary amounts, are great to give your employees and your workers. Bonuses to sole proprietors, partners, and limited liability company members are not deductible because the owners, partners, and members are considered by the IRS to be self-employed. But if you have contractors or you have especially employees, putting a little bit of a bump in pay in November and December, I always say this is going out the week before Black Friday. If you can give them a bump by next Monday, do it, because that is when they're going to be spending their holiday gifting money for their personal life. And if you give them a bump before they do that versus kind of reimbursing them at the end of the year for some of the payments that they've made over the course of the holidays, I just think it goes off better with your employees. We usually do a bonus at the beginning of December every year for our employees in particular, just so that they have a little bit of extra holiday spending money, and they're going to be happy, and you're going to move into the new year with smiling faces from your employees and your workers. Oh, and one last thing, if you have a contractor, sometimes I suggest prompting the conversation with them to increase their monthly rate in 2023. Instead of having them come to you, that's a good way for you to give a quote unquote bonus for your contractors. But because they're not employees, you could just say, hey, you've done such a great job this year. I've really appreciated your monthly work towards my business. I would love to bump you up an extra $200 per month next year. That to them is going to feel like a huge bonus, win-win. And maybe you even, if you again, can prepay some of that, you could be I would love to pay you quarterly. Can I pay you at the end of this year? Sometimes it doesn't make sense for your contractors that you're working with to bring that in and qualify that as income for their business in December. But some of them will let you. And I've done it before. I've spent $30,000 at the end of a year on a contractor to prepay, and they're all about it. They're yeah, I need that revenue. Looks good. So just have a conversation with your contractors, I guess is what I'm trying to say. Last but not least, tax deduction I want you to think about for 2022 tax purposes here in November and December is retirement. please don't forget about retirement. This is a way for you to spend but get the money back later down the road. My accountant has always told me, and I think he's like 66 or 67. He won't retire yet. And he's in my little small town in Montana. But I like kind of having like an older, more conservative way of thinking about my business money, because sometimes I just want to spend a lot and reap the immediate benefit from that expenditure by getting something tangible in hand that I've spent that money on, like an increase in gear or increasing something, or increasing the benefit of my use of my office, right? Like office supplies or a walking pad or those type of things. But my accountant has always been like, well, if you do have a chunk of business profit at the end of the year, why don't you just like take at least 25 to 30% of that and put it away for retirement? And retirement plan contributions are vital for sole proprietors and entrepreneurs because we don't have anyone else paying for our retirement but us. And you can often make most or all of the contributions after the tax year has ended. But some of them you can't. Some of them you have to make by December 31st. And if you are getting a surprisingly large tax bill from your accountant by way of the IRS and your state government, you can perhaps top off your small business retirement plan to gain some valuable tax deductions back and bring down your total taxes owed for the prior year. So start contributing now, look at what money you have, and then put it towards your future. That's what my accountant always says. That's what I always think as well. You know, how much business profit am I going to have by the end of 2022? I always think about this in November and December. I have a call with my financial advisor and my accountant in November and December of every year. So I can really plan out like, how much do I want to spend on tangible things that would be deductions for my business? How much do I want to just keep as business profit? And then how much do I want to contribute to retirement? It really makes me think long and hard about it if I'm doing that kind of strategic thinking in November versus between Christmas and New Year's, because I'm thinking about something else at Christmas and New Year's. Alrighty, everyone. In today's episode, I discussed a few end-of-the-year tax deductions that you could potentially take advantage of. And I'm sure your mind is just swirling with all kinds of information and like, oh, maybe I'll go buy that this week or next week. So let me recap on the deductions you can take as we enter the last little bit of 2022, and especially next week for Black Friday. Office improvements, stocking up on office supplies, and prepaying for expenses in like a yearly bundle. Buying contracts. Hello, the Legal Paige shop. Stay tuned. And writing off bad business debt, and then giving employees bonuses or gifts, and then finally contributing to your retirement savings. All of those I discussed today. And finally, I do want to disclaim that there are many more tax deductions you can take advantage of. I just listed a few that I do every year and I think about and my business colleagues think about. I always recommend, of course, reaching out to a tax professional or a certified public accountant, CPA, for advice if you need. My CPA is a wealth of information. They have professional liability insurance. So you're putting the onus on them if they give you wrong advice. It's just good business practice to have a CPA, especially as a small business owner. We can't wear all the hats. Don't try to be your own lawyer and don't try to be your own CPA. That's why there are professionals who get degrees to do that and certifications. And as I mentioned, my accountant always does tell me that sometimes keeping money is the best form of moving forward at the end of the year. So while I did mention deduct this, deduct that, take that as a write-off, as David would say throughout this episode, I just want to mention to you that even though you could deduct that $1,000 purchase, you could also not buy it and make, say, 70% of the $1,000 if you have average a 30% tax liability amount. So sometimes keeping the $700 of that $1,000 is just a better financial decision for you. Think about it. Do you really want that $1,000 piece of equipment? Are you going to utilize it? Or is 7 $100 bills sitting in front of you looking a bit better right now? Of course, giving 30% of the $1,000 to the government is a drag, but that's just the world we live in, and taxes are something you have to do every year. But I like to remind people when I talk about tax deductions, always, is that your business is there to make profit. Unless you're running a nonprofit organization, which many of you aren't. I would say 99.9% of you aren't that are listening to this episode. If you are trying to make a profit, make a profit. Like, don't go deducting $5,000 to $10,000 of your $20,000 profit at the end of the year. Like, take the $18,000 to $19,000 of profit, okay, and pay your 30% in tax liability or whatever you have at the end of the year. You're probably not going to have it if you only have 20%. You're not going to have it if you probably only have, a $20,000 profit. But if you're making six figures, then, sometimes it would just behoove you to keep that money as income versus expending all of it at the end of the year. Don't just try to break even. Try to be in the black always. But again, tax deductions are also good. All right, that's how I'm going to end this episode. Thanks, everyone, for listening. I will catch you in our next one. Thanks so much for listening to this episode of the Legal Paige Podcast. See, I told you being legally legit isn't so scary. Be sure to visit thelegalpaige.com for all show notes. And it would be super awesome if you could head over to iTunes and leave a review. Last but not least, don't forget to join my free Facebook group for unlimited legal and biz Q&A. Chat soon, Legal Pagers.